Hey, not sure if you've heard, but the Federal Reserve could soon cut interest rates. We haven't seen this in a long time.
On Monday, Fed Chair Jerome Powell said the Fed can cut rates as it sees more good inflation data. This can change the way that we look at our finances. So joining us now is debt lawyer and founder of Tayne Law, Leslie Tayne. Thank you so much for joining us this morning.
Thank you for having me today.
So what does this mean? Is this good news? Should people start, what would you suggest they do with their debt right now?
So this is good news. It's definitely a step in the right direction. So those with debt, it's a good time to reevaluate your budget and where your money is going. So when rates come down, savings rates come down. So it's a good time to lock in high interest savings and CDs. And again, take a look at your budget to determine what you might do when that rate comes down.
Yeah, I mean, so normally whenever the interest rates go down, it makes it easier to take out lines of credit. This isn't necessarily the advice that you're giving. You're saying, maybe if you get, well, you tell me, what advice are you giving? Because people may be like, oh, now I can get a credit card.
A quarter point is not necessarily significant, although it's, again, a good step in the right direction of rates going down. When you're looking at refinancing fixed debt, and that's something like a mortgage, a quarter point may not be enough to refinance, but it is helpful in day-to-day expenses like credit card debt and other variable rates that will start to come down. As rates come down more significantly, if you are locked into a high interest rate on something like a mortgage, it is a good time to take a look at refinancing.
So should people make any big changes right now with their savings, or should we wait and see what happens?
When it comes to your savings right now, interest rates are high. So it's a good opportunity to keep money in a high interest savings and look to lock in long-term CD. If you don't need the cash, you can lock into a long-term investment that's holding interest rates at a higher rate.
Yeah, like now, because as soon as they do this, those rates will start to come down a little bit, like you said.
That's correct. So as soon as the rates do change, while there's a positive and negative to that, the positive is that overall we want to see rates come down because it sparks businesses and consumers borrowing again. But on the flip side to that, your savings rates and your CD rates that impact your investments, the interest goes down on your investments as well. So now is a good time to take a look at those rates and see if you have cash that you could put into those high interest CDs or savings and take advantage of it.
Can you talk a little bit about budgeting? Should this impact, like if we're week by week making our budget or month by month, what should we be doing differently?
When things are changing so quickly and rapidly, it is always a good idea to revisit your budget. Things change with people's budgets weekly, monthly, even quarterly and seasonally. So as interest rates change, it is a good idea to kind of take a look and see where your money is going. So with the anticipation of reduced rate, now is the time to look at your budget and say, where is my money going? Can I put more into savings? And if I can put more into savings, maybe cut back in other areas to take advantage of the higher rates. Or if you're looking to buy a car or refinance, or you're looking at larger purchases, it might be a good idea to put money in savings, hold off on the larger purchases and take advantage of the higher interest rates, wait for the rates to come down, and then take advantage of the lower rates when you're looking to finance a large purchase.
All right, Leslie Tayne, thank you so much for those tips this morning. We appreciate it.